Okay, so today what we are going to see is basically we are going to see classification of various assets, liabilities in the balance sheet where we will be putting them. Now, this type of questions are not expected in your exam, but why we are doing is so that you get a clarity of where each and every item goes into the balance sheet, because it is a prescribed format as per Schedule 3 of Companies Act. So we will have to follow the prescribed format only, and that is why it is important for us to know exactly where each and every account goes. And that is why these sums are very good for practice, and it will also help you to recall what you have learned. Okay, so take this very seriously and keep on doing such sums on regular basis so that you are able to memorize properly and recall where every account will come. So now we are starting with illustration 1. Similar exercise I have already done in my other video lecture, which is there on the app. You can watch that and you will be doing that as a part of your homework. Now over here we go to illustration 1. So we'll be doing illustration 1, 2, and then we'll go to some other illustration. How will you show following balances in balance sheet of a company? Okay, just let me increase the size. Balance sheet of a company as per Schedule 3 of a Companies Act. So here we have to show various balances in the balance sheet of the company as per Schedule 3. Now for that we will be following the format which is given, which is serial number, then the balance sheet head, that is equity and liabilities and asset, then main head like shareholders fund, okay, non-current liabilities, current liabilities, and then subhead, okay, where it will go. For example, it will go to share capital, or it will go to reserves and surplus, okay, it will go to long-term liabilities. So we'll be classifying into various head, subhead, and the balance sheet head. Now, over here, what are covered are basically all liabilities. So we'll do this sum for understanding various liability side or equity and liability accounts, and then later on we will go for asset accounts. So let's start one by one. Now I'm deleting this question so that it becomes easy for you to visualize properly. Okay. So now let's start with first one, that is equity share capital. So for equity share capital, we write serial number 1. Okay, so first one, equity share capital. So let's write equity share capital. Now balance sheet head, we all know equity and liabilities. Main head, shareholders fund, and subhead, share capital. So you keep this handy with you, the balance sheet format, what you have written, and that will help you to do the sum properly, okay, in case you are not able to recall. Second comes is calls in arrears. Now calls in arrears, again, equity and liability. Then again it will go to shareholders fund. But calls in arrears we deduct from where? Calls in arrears we deduct from subscribed capital. So deduct from share capital. You can refer the other format which I have given to you. Oh. Then forfeited shares account. Now forfeited share account, again you know where it will go. Forfeited share account, it will go to equity and liabilities, shareholders fund, and again share capital. Both. You can refer the format which I've already given you, this one. Okay, you can keep it with you so that in case you're stuck up, you can refer. So then next one, calls in advance. Now calls in advance is our liability. So again, equity and liability. Calls in advance main head is current liabilities, because this will be adjusted against the calls what we will make, and subhead, where it will go, the subhead will be other current liabilities. In case you have any doubt, you can raise your hand and ask the doubt. Security premium. Security premium, again, equity and liability. Again, shareholders fund, reserves and surplus. Sixth, general reserve, again the same. So equity and liabilities, shareholders fund, reserves and surplus. Debenture, again equity and liabilities. Now debentures are non-current liabilities. Debentures are non-current liabilities, and debentures are long-term borrowing. Eighth, creditors, again equity and liabilities. Creditors basically are trade payables, so it will go to current liabilities under the heading trade payables. 9. Loss as per statement of profit and loss. Loss as per statement of profit and loss, again equity and liability. Now loss will go to reserves and surplus as a deduction. So main head will be shareholders fund, reserves and surplus, and it will be right in the bracket, deducted from it. It will be deducted from reserves and surplus because it's a loss. 10. Public deposit, money accepted from public, equity and liabilities, non-current liabilities, long-term borrowings. So this is how you have to classify, okay, various accounts. So illustration 1 is over. Just go through it, see if you have any doubt, and let's move to illustration number 2. So other current liabilities. other current liabilities. Third, bond, not James Bond, okay? This is a debenture wala bond, similar to debenture. So equity and liabilities, long term. So main head is non-current liability. And this is long-term borrowing. Fourth, bills payable. Again, equity and liabilities, current liability, it is under the heading trade payables because trade payables has creditors as well as bills payable. Then debenture, redemption, reserve. Debenture redemption reserve. Again, equity and liabilities. Redemption reserve, so shareholders fund, reserve, surplus. Six, term loan. Now, term loan, again equity and liabilities. So term loan is a loan what we have taken for a longer period of time. Okay, you can see it in the heading, again in the subhead. So go to the balance sheet format and term loan, just show it to you. Page number 128. Under the heading long-term borrowing, you have debenture, long-term loan or term loan, bond, and public deposit. So that is why it's important for you to remember this. Non-current liability, long-term borrowing. 7. Reserve fund. Equity and liabilities, shareholders fund, reserves and surplus. Advance received from customers. Advance received from customers is your liability, so equity and liabilities, current liabilities, other current liabilities. 9. Outstanding interest on debentures. Again, similar equity and liabilities, current liabilities, other current liabilities. Okay, you can keep this paper in front of you. That will be easier for you in case you are not able to recall. Okay. It's the last account under the heading other current liabilities. 10. Bank overdraft. This is interesting. Equity and liabilities, current liabilities, short-term borrowings. This is interesting. Okay, cash and cash equivalent, we will not take this as a negative balance. We will show this separately. So I'll mark it, I'll highlight it, important. Okay, please be careful about bank overdraft. So this is important, bank overdraft. Okay, let's go through it and see if you have any doubt, if you're not able to understand any particular term over here or any account over here. Okay. Illustration number 3. Illustration number 3. Make the format. Okay. Now the first one for illustration 3. Debenture redeemable during year. Debenture redeemable during the year. Yani during the year only we have to redeem. We have to pay the money back. So equity and liabilities. Main head, current liabilities, and other current liability. Second, cash credit. Cash credit is just like a bank overdraft. So equity and liability. Main head is current liability. Subhead is short-term borrowings. Third, provision for tax. Now provision for tax. Again, equity and liability. Now provision for tax is basically current liability, short-term provision. Now, provision for tax will also come in your statement of profit or loss. So, come to page number in the textbook, page number 132. You can see on the top, page number 132, provision for tax. But because here we know we are doing everything connected with uh, the balance sheet head equity and liability, we write equity and liability. Otherwise, it also comes as a part of statement of profit and loss. So from profit and loss, we create aside a provision. It is transferred to balance sheet under the main head, under the balance sheet head equity and liability, main head current liability. And because we have to pay shortly, so it is a short-term provision. So it has again two effects. Okay, when we do a full-fledged sum. Now fourth one, rent received in advance. Now rent received in advance, equity and liabilities. Now you have received rent in advance, so it is your liability. And rent received in advance, what type of liability is this? So it is your other current liability, rent received in advance. So you have received rent in advance, which you have to adjust. Okay. So fifth one, short-term loan. Here it is given credit balance, so it's our liability. So equity and liabilities, current liability, short-term borrowings. Sixth, provision for gratuity. Provision for gratuity, again equity and liability, current liability. Okay, it's a provision, so short-term provision. Now, oh, I'm sorry, it is a non-current liability because it is gratuity. Non-current liability, and it is a long-term provision, okay, because it's for gratuity. Which what is now gratuity? It is amount which we have to pay to our employees, okay, when they retire. So it will be long-term provision. Seventh is workmen Workman accident compensation fund. Workman accident compensation fund is basically equity and liability. It's a amount kept aside in case accident takes place. So it is under the heading shareholders fund, and it will go to reserves and surplus. 8. Preference shares capital. Now preferential capital, equity and liability, shareholders fund, share capital. General reserve, we have already done this, the previous sum. Equity and liability, shareholder fund, reserves and surplus. Premium on debentures and redeemable during next year. So premium on debentures redeemable during next year. Equity and liabilities, current liability, other current liability, because we have to pay it during the next year. So within 1 year we are going to pay it off. 11 calls in advance. Already done this on shares. In equity and liabilities, current liabilities, other current liabilities. Okay, now I've got one doubt over a message that, sir, what is gratuity? Now, gratuity is basically, now in India we have a gratuity act. So it means we have to keep aside some money which will be given to the employee when they leave the job or when they retire. So that is why there is this provision for gratuity. It is applicable to factories or applicable to such organizations where number of employees are quite high. It is defined in the act. Now, right now, I don't want to go into the detail of the act and all. For you, just remember, it is amount which is payable to the employees. Okay, so that is gratuity. Just like provident fund, we have gratuity. Okay, we have pension. That is all statutory requirement, and that is why we make a provision for gratuity every year out out of our profits, and then we have to pay this to our employees when they leave the company or when they retire. Okay. So now illustration number 6 is what we are going to do for all various accounts of assets. So just go through the format of asset. Okay, now in asset you have, this is the balance sheet head asset. Then you have non-current assets and current assets, which are the main heads. And then you have these subheads. Now what are these subheads? You have fixed assets, tangible, fixed assets, intangible, then non-current investments, so investment which are there for a longer period of time, more than 12 months. Then you have long-term loans and advances, and you have other non-current assets. So just go through it, what comes where. Now provident fund investment, debenture redemption fund investment, shares of subsidiary company, everything will come in non-current investment, long-term loans and advances, so loan given to employee more than 12 months, custom deposit, telephone deposit, electricity deposit, then other non-current. So you have to write off all these expenses deferred revenue expenses uh, after 12 months, so that will come over here. Then you have current asset, you have current investment, inventory, trade receivable, then cash and cash equivalent and short-term loan and advances, and then you have other current assets where you have prepaid expense, income due but not received. Okay, that's sort of. So just go through it once and then we start with the some illustration 6. Okay, so let's see illustration 6. Following balances are taken from the books of Kobe Limited as on 31/3/2017. So please underline this date 31/3/2017. It is important for this sum. Okay, so I'll underline it 31/3/2017. State how these balances will be shown as per Schedule 3 of the Companies Act 2013. Now let's go one by one. Now first one is land and building. Balance sheet head is assets. Main head you write non-current asset, and subhead you write fixed asset tangible. Second, shares of subsidiary company. Shares of subsidiary company, assets, non-current assets, non-current investment which is for a longer period of time. Third, debtors, assets, current asset we all know, and it is trade receivable. It is trade receivable. Okay. Closing stock. Again asset, current asset. Now closing stock is part of your inventories. Okay, so you write inventories. Fifth, short-term investments. Clearly given it is a short-term investment asset, current asset, short-term current investments. Sixth, bank balance. Asset, current asset. You know bank balance is a current asset, and cash equivalent. Cash and cash equivalent. 7. Goodwill. Asset. Now it is non-current asset and we know it is fixed asset. Intangible. Fixed asset intangible. 8. Furniture. Asset. Non-current asset. It is fixed asset tangible. 9. Custom deposit. Asset, non-current asset, custom deposit is for long term. Long term loan and advances. It's long term loans and advances. Pen. Trademark. Trademark again asset. It is non-current asset. Now trademark is fixed asset. It is intangible. Trademark, service mark, goodwill, copyright, patent, licenses, franchising. They are all fixed asset, intangible. Prepaid insurance premium. Prepaid insurance premium you are paid in advance. It's your asset. It's your current asset. Now where it will come is other current asset. 12. Prepaid, okay, outstanding or receivable interest, such will go to other current asset. 12. Bills receivable asset, current asset, trade receivable. 13. So 13, stores and spare parts. Stores and spare parts. Again, assets, current asset, inventories. It will form part of your inventories. 31, stores and spare parts. 14, loan to employees. Asset, current asset, loan to employees generally is a long-term loan to employees. So long-term loans and advances. 15 is important. 15th is important. Government securities. Now maturity date is given, so I'm writing it. 30-06-2017. So your date is given. So let's check out whether it will be maturing in short term or long term. So 31/3/2017, and after 3 months this will be maturing. So asset. So it will be current asset and it will be your current investment. Okay, it will be your current investment. Government security for less than 12 months. Then 16. Prepaid taxes. So assets, then current assets, and then other current assets. Prepaid. Okay. 17. Fixed deposit bank. Again, maturity date is given, so I write that maturity date is 31/3/2020. Okay, FD is maturing on 31st March 2020. It's your asset. Now it's your non-current asset because it Our balance sheet date is 31/3 and fixed deposit is maturing on 31/3 2020, so more than 12 months. So it will be your non-current investment. It will be your non-current investment. 18. Loose tools. यानी वो नहीं, लूज हो गए टूल्स नहीं, लूज टूल्स. Okay, यानी पाना, पकड़, स्पैनर्स, all these. Assets, current asset, inventories. Loose tool, current assets, inventories. 19. Loan to directors. Yes, temporary word is used. Temporary. Loan to directors is temporary. Assets, current assets. You have given a loan short term. So it's a short term loans and advances. Short term loans and advances. And 20th, investments in provident fund. Now you have kept aside money for the employees, so what you will do, that money you will invest so that you can generate return and give that return to the employees. Okay, so assets. Now is any tenure given? No, so non-current asset and non-current investment. So it's generally for a longer period of time. So go through all of them and see if you have any doubt in this. In the previous one,